Thank you very much. Второй вопрос я бы хотел адресовать Полу Моррису, который в первой секции уже рассказывал о ряде своих проектов, в каких он вовлечен и как он видит корпоративные и венчурные инвестиции со стороны своего опыта, с высоты. Пол, у меня вот какой вопрос. Я недавно прочитал в новостной ленте одной из публикаций, что в Нью-Йорке открылась программа так называемой посtakселерации. И одноименный фонд, который называется Workbench, созданный известной американской компанией iR&Dclub, которая является ветераном печатного дела с историей 149 лет и на площади 32 тысячи квадратных футов. Они открыли некий инкубатор, если хотите, сутью которого является помощь компаниям поздних стадий развития, прошу заметить, у которых есть существующее финансирование, продукт, первая история успеха и продажи, в организации отношений с крупными корпоративными клиентами. Скажите, пожалуйста, с высоты вашего опыта участия как со стороны крупного бизнеса, так и со стороны государственных организаций в создании и стимулировании программ корпоративного инвестирования венчурного, что ваш опыт говорит о тенденциях, явлениях, которые сейчас находят свое отражение в подходах к созданию и управлению такими корпоративными венчурными инвестициями? И как меняются цели, ожидания и способы решения задач вот на том горизонте, в котором вам удалось понаблюдать за развитием этого инструмента?
Okay, thank you, and hello again. I want to, as I mentioned earlier, I've worked in corporate venture capital for 17 years. I want to share some of the thoughts and learnings from that with you this morning. Just my background, I did mention briefly earlier, I spent most of my career with Dow Chemical. I did a variety of different commercial and business management jobs. I led new business development across Europe, Africa and Middle East for Dow, and then back in 1996 I set up the corporate venture capital unit in Europe, and from that period until leaving Dow last year invested over $100 million in a combination of fund investments as an LP, 15 funds, and over 35 direct early stage deals covering all sectors. And I've been very much involved in initiatives to promote and advance corporate VC. I left Dow last year, set up my own advisory business, and primarily I'm working with corporates who are setting up new corporate VC programs. I do a little bit of work with venture capital funds and some startups as well, and then the work I do for UKTI, which I talked about in the first session, is the one referred to at the bottom there. I'm not going to spend, I only just have one slide on that because we covered it in the last presentation, but that work with UKTI, the venture capital unit of UKTI, basically exists. It's a dating service introducing investors, primarily corporates and venture capital funds, to startups, UK startups. So it's a dating service. Whether these people actually get in bed together or not is up to them then, but certainly there's been a lot of good engagements that have happened from the introductions that the venture capital unit has made. So I want to talk about corporate VC, but just to set that in perspective first, I've just got two slides on venture capital industry. So the venture capital, the latest data that we have for the last full year, which is 2012, the total amount of venture capital investment in the US was $26.5 billion. US has always been much larger than Europe as a venture capital market. Typically Europe is about a fifth of the size, and you see that reflected in the figures there. Europe 5.6 billion last year, and Israel looks relatively small at 1.2 billion, but actually if you look at VC investments as a percentage of GDP, Israel is even ahead of the US at 0.18, US 0.15, and Europe lagging behind at 0.03. And the sector splits between different sectors where that venture capital funding is going. 30% into life sciences, 20% electronics, 15% communications, and then smaller amounts into energy and efficiency and chemicals and materials. So their percentages, if you look at the US market alone, just two points from that slide. The last bar on the right, 2012, is the $26.5 billion that was on my previous slide. And you notice the enormous figure. This was the dot-com boom in 2000, where over $100 billion were invested in the US alone. This was a lot of what was later called irrational exuberance, and a lot of people got to regret the fact that they threw money at some not very good companies at that time. So, moving on to corporate VC, corporate venture capital, and I think Amikan made some very good points in his talk there, which I fully agree with. It's a subset of venture capital, and it's probably, the data is not exactly clear because not all corporates report their corporate VC investments, but it's about 10 to 16% of all VC investments, and my estimate is probably around 15%. That's $4 or $5 billion being invested by corporates last year in corporate VC deals. It's been difficult for fund managers to raise new venture capital funds. These are traditional financial fund managers, mainly because the return of the asset class in the last decade has been very poor, and many funds have disappeared. But corporate VC is the one area within general VC that's growing and buoyant and very active and dynamic. So I think I mentioned before, almost 1,000 corporate VC units globally, and about a quarter of those have been started in the last 3 years. And Google just started 3 years ago, but they are very active, making many investments at the moment. And Intel Capital has been around for over 20 years. They are by far and away the biggest, and have been for many years, the biggest VC investor. They're doing 60 to 80 new deals every year, and they've got several $1 billion of assets under management. So, in terms of cycles, corporate VC is not a new activity. You can go back to the mid-60s and find corporate VC activity. I'm not going to spend too much time on this slide, but if you look at cycle 4, the last column there, the current cycle is considered to have started in 2005. I think this is much more sustainable, long-term, better organized, and has much more momentum. And I really hope that this, you will not be seeing in a few years' time that there's a cycle 5, 6, and 7. I think this one should continue. So, why do corporates do corporate VC? And again, Amikam, I think, covered 1 or 2 of these points. There are many reasons, and here are 6 or 7, but you could add more to this slide. Just quickly to go through those. Some people think that corporate VC investments are a precursor to acquisitions. Well, they are, but only maybe in less than 5% of all cases. So, a small number do result in acquisitions by the corporate parent, but it does give the corporate those options. It's a way of outsourcing R&D. Small companies that you invest in are very innovative, and they do R&D that otherwise might have needed to be done or tried to be done within the corporate. You can monetize embedded skills so that when you're doing due diligence, you go to your experts in R&D or businesses, and they will help you do assessment of technology in companies that you're looking to invest in. It gives you access to all sorts of external capabilities that you may not have internally within the corporation. It gives you a vehicle to understand emerging technologies, markets, and business models. And it's really a mechanism of interacting with startups. There's a very different corporate culture between large corporations and little dynamic startups. And making minority VC investments through a corporate VC unit is one way of interacting in an effective way with those small startups if you're a large corporate. And then it's also, the corporate VC group can help find external funding and help facilitate the process of spin-outs if you as a corporate want to spin something out. And I just saw in the news yesterday, or the day before I think, that there's a company, Yota Devices, which I understand is the first Russian company to launch a smartphone. This was a spin-out out of Skartel, I think it was, just 3 years ago, and they're just about to launch a smartphone in many different countries around Europe. Interesting company with its design team in Finland and its manufacturing in Singapore. Sounds like a great success story, although I don't know if it was VC funded. Just a slide here showing penetration levels by different industries. So, just for example, if you take the first column there, which is technology, what that says is that in 2012, of all the larger technology companies in the industry, 70% of them had an active corporate VC program. 5 years earlier, in 2007, it was only 50%. And then if you look at the other end of the scale, in pulp and paper, only 7% of the companies in pulp and paper have an active corporate VC program. It's interesting to note that the more innovative, dynamic industries are on the left-hand side, where the penetration of corporate VC programs is much higher. This is the key question for any corporate VC, and if you're thinking of setting up a corporate VC unit, this is something that you need to spend quite some time thinking about. It's how do you measure, or how do you set the parameters by which success and performance will be measured? And there are two key things to measure. One is financial return, and that's relatively straightforward. You put cash in, and you get cash out. Strategic benefit, and for a typical VC fund, that's all they're interested in, and it's all they measure. For a corporate VC fund, for the majority, strategic benefits are more important than financial return. But measuring strategic benefits is much more subjective, it's much more difficult, and this is really a challenge. And not being able to measure these and report these correctly has been one of the main reasons why corporate VC programs have failed and been killed by their parents in the past. So, why is it difficult? Well, when you think about strategic value created, who actually measures strategic value created within a corporation, and how do you measure that, and how often, and when, and how often do you recalibrate? These are all key questions that you need to think about when you're setting up a corporate VC program. And if you have good, or you're perceived to have good strategic value created, does that mitigate if the financial returns are not so good? So I think ultimately that, people say, how do you measure success? For me, survival is the key element of success. If you continue to get support of your corporation to invest, and have capital to invest, and resources to pay your team, then somebody in the corporation thinks you're doing a good job. Anybody know how long the longest currently active corporate VC unit has been operating? Anybody like to hazard a guess in number of years? I don't have a bottle of champagne either, but anyway, the answer is 40 years, and the corporate VC unit is Johnson & Johnson Development Corporation. I don't know, those of you who saw the presentation from Sharon last night, this reflects a little bit what he was saying, that early stage innovation and discovery is done in universities, government labs, startups, and that, much less by corporates these days. Corporates are active at the right-hand side of that chart in terms of commercialization and selling and marketing. But there's this so-called valley of death. How do you get those startup companies through that valley of death to a point where they are commercial and revenue generating? And corporate venture capital, not only providing the capital, but also providing guidance and help and support to those early stage companies, can help get through that so-called valley of death. And that's also partly the reason why this UKTI venture capital unit was set up, to help bridge that shortage of funding in early stage companies. So I'm going to just one or two slides, if do I still have any time? Yeah. Okay, on Dow Chemical. Dow's a around $60 billion company, over 100 years old, more than 3,000 products, manufacturing in many countries around the world. Dow's moving, for many years has been trying to become more of a specialty company, less reliant on commodity chemicals and plastics. It bought Roman Haas as a specialty chemical company in 2009, and just announced in the last few days that it would exit its chlorine business, which generates about $5 billion of revenues today, and that was one of the businesses the company was founded on. So Dow Venture Capital is part of that drive to help Dow become more innovative. Founded in '94, invested almost $600 million in investing in startups. And the main reason for Dow Venture Capital's existence is to enable and accelerate new business growth for Dow. Investing in companies that have high growth potential, and Dow wants to have a strategic impact as an investor, i.e. wants to bring more than just funding, wants to bring other things for the company. Returns, focus on returns being short term, that's in terms of financial return, and long term in terms of strategic value. Investment philosophy, I don't need to go through all that, but I think the key points there are, Dow wants to invest in companies with credible business models, so it's not just technology, it's how do you translate that technology into meaningful businesses. We'll lead deals or invest alongside other leads, and would put up to $25 million in any one company today. One slide on fund investments. The last slide was referring to direct investments, but Dow did invest, as I said at the start of the presentation, in many different funds, in fact 30 different funds, and I managed about 15 of those investments. And as I said earlier, I think investing, particularly for the early stages of a corporate VC program, investing selectively in funds where the interests are aligned can be a very powerful tool to help you not only access deal flow, but also access expertise that's embodied in the management of that fund. Again, this is just one of the challenges Dow faced. You see the red circled oval, the venture capital group, and then other internal groups there, new business development, licensing, etc. And all the external bodies, such as universities and national labs and startups that those groups had to interact with. And it's a fairly complex matrix. So how did we solve that? And again, just concentrating on the red circled oval, the venture capital group, they would invest directly in companies, that's the bottom right-hand corner, but also invest indirectly through many more companies by taking positions in funds. They're the two green ovals in the top right. So, key question, did Dow Venture Capital create value? Well, in that period, 94 to 2012, Dow VC committed about $600 million and had three main sources of value created. One was financial return. Now, that actual number is confidential, but the goal was that the corporate venture capital unit return on investment would be better than Dow's corporate return on capital. So I can't say much more than that other than to say Dow Venture Capital continues to be active. Strategic gains, again, more difficult to measure, more qualitative, but generally accepted that there's a lot of value, strategic value created through the program. And finally, as the expertise in the Dow Venture Capital team grew, we became a management consulting resource internally for senior management, new business development, etc. So again, I'm not going to go through all those, but just examples of investments that Dow made across Europe in many different countries, with the UK quite heavy, and you see that the different technologies and areas covering a very broad range of sectors. And then just a couple of points on successful exits. Caliper was a US company where Dow made a 40 million gain when it exited that investment. DNA Research International was a DNA company where Dow had a 5x multiple when it exited the investment, when the company was sold to Invitrogen for $68 million. And then finally, Phil Factory was a CMOS semiconductor company in Belgium, which was sold to Cypress Semiconductor for $100 million, and Dow made 11x. So that was a really, really great return for Dow. So, last slide. Do these little venture capital-backed companies ever grow into anything meaningful? Well, I guess there's not many people in the room who haven't heard of FedEx, Starbucks, Google, Microsoft, eBay, Genentech, Intel, Apple, and Facebook. I'm sorry to the translators. But all those companies started life being small VC-backed companies. And just a couple of, I think, quite impressive data points, and this is just US. So since 1970, over $450 billion has been invested by VC firms into more than 27,000 companies. And VC-backed companies account for 12 million US jobs and over 20% of US GDP. So it's pretty active. This is not a niche sector. Thank you.
Paul, thank you very much. Коллеги, прошу заметить, что вы уже увидели двух специалистов, которые не только могут рассказать про теорию корпоративных венчурных инвестиций, но имеют достаточно большой практический опыт в области энергетики и химических материалов, таких как Dow Chemicals. Поэтому вы можете зарезервировать для себя, если у вас есть такие практические вопросы по портфелю компании, по тому, как они оказались в портфеле и что с ними оказалось после этого, по минимуму двум специалистам уже. Может быть, у нас сейчас накопится еще больше. Поэтому мой следующий вопрос я бы хотел адресовать Амиру Зайдману. Амир, у нас организация обладает некой спецификой, которая свойственна ряду российских компаний, а именно ряд направлений бизнеса и разработок, связанных с производством оборонной продукции. В общем, такая достаточно чувствительная тема для, наверное, любого предприятия в любой стране. Расскажите, пожалуйста, какие задачи вам нужно было решать? Стимулирование ли притока инновационных идей или обеспечение дополнительных доходов от внутренних разработок? И в какой среде, с точки зрения и культуры, и модели взаимоотношений?